Hello, welcome. Today in this video, we're going to do a quick update as far as for are we still due for any major corrections in the market? Like what are the catalysts what we're looking at now? And I'm going to do some QA, some TA, excuse me. Just let me know if you can hear me. I'm going to put it in the chat. I'd like to make sure I'm not speaking to myself. And then we're going to jump right into it. But so two of the major things I'm going to talk. Okay, perfect. Two of the major things that I'm going to speak on are the Fed did come out and confirm that they were going to do the 0.25, the quarter percent, which is what we've been talking about for like the last week, just because of a lot of the major catalysts going on outside of the markets we have here. I felt that they wouldn't risk having two negative catalysts potentially pulling on the market just because there's so much uncertainty with the Russia and Ukraine situation. And that they come out and say, hey, well, we're going to cut down, we're going to be super aggressive in the with the rate hikes just to try and get inflation under control as quickly as possible. Then now we have 2 points that are pretty much pulling down on the market. So that made a lot of sense as far as for why they're not being as aggressive as they initially hinted at in January and February. You say Feds have the upper hand. Yeah, I mean, that's pretty much their job. Their job is to pretty much control the market, make sure we have market participation, and also monitor inflation to make sure that we are at a healthy range, which is around 2%. So the question is, are we still going to get a breakdown further in Dogecoin and Bitcoin? Dogecoin is primarily what we're talking about here. Bitcoin is obviously a market indicator. And in January, we were looking at the numbers, January, February, and based off of the raging inflation and stuff like that, we were due to get that breakdown in Dogecoin, which is like below 12 cents. 12 cents being a floor. We did get a breakdown, bounced off of the 10 cents, and we pretty much have been consolidating around that 12 cents floor, which is great for Doge. Bitcoin, the numbers are hitting at pretty much doing a retracement back into the 20s, and we've seen a lot of catalysts coming out, pretty much being able to fluctuate it, but it's not breaking any of the retest lines and stuff like that. And I'm going to make another video on the all-time high flows and stuff like that, Bitcoin, and I'll save that. But the question is, are we still due for those, or what are the likelihood that we're going to have those further breakdowns? And that's Doge even going down to the support line of around like 6 cents, and Bitcoin retracing to around 20K. So we have two things that can cause a further breakdown. Otherwise, the 0.25% is, I won't necessarily say bullish, but it's pretty much going to put us on a wait and see, right? So with the 0.25% hike, the major thing that can really cause the Fed to come back and be super aggressive or send shockwaves through the market is if it has very little to no effect, right? So at the next Fed meeting, if it comes out and say, hey, you know what? We did the rate hike. It's not fast enough. It's not being aggressive enough. We still had inflation month over month, and year to date, it is still going up. So now we're going to have to, instead of the 0.25, we're going to have to do 0.50 or just try and make it up or try to be more aggressive. That can cause fear in the market. And also, obviously, if we have let's just say a turn of events with the Russia and Ukraine situation, or there is a level that, America would have to get involved, and not just financial support or just, doing sanctions and stuff like that. If we have to physically get involved, that can cause the panic as well and get us to breakdown. But as far as for the Fed's, just the interest rates coming in, we're pretty much going to have to wait and see. They've been infamous for pivoting, doing U-turns, or delaying aggressive movements if in the event that they don't have to, or if there's something else that's pending. So I think this is kind of what they are doing now, because they can't, inflation is bad enough to the point where they know it's a bad time to, like, I don't want to say force a recession, but cause a recession by being too aggressive, just because there are other factors in play now. But also, it's something that can't be ignored, because again, this is an equation of numbers here, and despite what's going on internationally, or what's going on between two countries and our level of involvement, it still has to be dealt with. So I think that we're going to pretty much have to, this is going to roll over pretty much into the second quarter of this what ifs and stuff like that. And I posted the fear greed chart in the community section today as well. And we can see that we are still in the extreme fear. And that's mostly because as an investor, you can say, oh, okay, we've bottomed out, and just say, okay, well, this is the bottom here. We're not going to get the further breakdown. So we can all just go in and, we're going to continue the bull run. Well, if you take a deeper look into it, you'll see that none of the issues that I just talked about has a solution. We don't know how this rate hike is going to, work, or if 0.25 cents is aggressive enough, and we sure as hell don't know what's going to go on. What the solution for the Russia and Ukraine situation. So as of right now, we're still pretty much in limbo, and this is looking like it's going to roll over into the second quarter. These are two of the biggest catalysts as far as for institutions pulling money out, rebalancing portfolios, and ultimately causing that breakdown in the market. What we do still have, and I haven't seen any adjustments or statements, in changes, but what we do still have is the Fed said they're not going to do any QE after this month, pretty much. So we're still not, I guess we're still going to see what the market is pretty much made of without any of the funding money. So we know we're going to have that breakdown to see pretty much what the market is actually made of, because up until now we're getting billions of dollars through mortgage-backed securities and bonds in the market, and now we're going to see what the market is without that help. So that still technically can cause a downtrend in the market, but as far as with the Fed's catalyst and stuff like that, we're going to have to, unfortunately, this is going to roll over into Q2. So because we don't have any solutions for these long-term, well, I say long-term, but these major catalysts here, just because everything's kind of delayed and they're playing off of each other. And if we look at the chart here, as far as for whether or not this is going to be respected, you can see that because we've been consolidating at 12, we're bringing down our our EMA, the 21-day moving average, we're bringing it down, and we're literally staying, this is literally working out perfectly as far as for this bridge here being respected. And we're actually trending down here to the focus point, which is going to be around like 12.19. And we're going to hit it. We can hit it as soon as like the 10th. But I say as late as the 12 if we got like a further breakdown into like the lower 12s. But we can hit it between like the 10th and the 12th. And that's not just because we hit the trend line. That doesn't mean necessarily that Doge is going to get a break further to the downside if there's not a correction. What that means is we're going to sit in, what that means is we can certainly have a break in either direction, but it just really much means that we're starting a new trend. And as of right now, I'd say it's a little early to say, okay, well, which direction it's going to go, but around the 10th through the 12th, you can expect a new trend in Dogecoin. And I'm not saying it can't go down further, or if it's just continue going sideways, we're going to have to kind of wait and see. But just know that range here, the trend that we've been following for like the last couple of months, it's run its course. So we're going to, pretty much start a new one, and we'll kind of chart that and start planning entries and stuff like that. And the 12 cents and 6 cents, we'll see if those are still in play, and we'll rerun the numbers for a break to the upside as well. And of course, I'll give you all those new numbers, because those will certainly make a difference going forward. So when you look at that, those are the numbers that we're kind of gonna have to watch for to make sure, pretty much make sure that we're on top of things, and the numbers and everything that's going, ahead of schedule, and making sure that we're on task. So let's see, we're gonna take a look here at Bitcoin as well, because we can take a look and run the numbers here for this one. Let's see. So let's see. Yeah, so if we take a look here at Bitcoin here, it is I won't say it got rejected off of the 200-day moving average, but it was pretty close. And despite despite like the volume and stuff like that, this is still not an indicative. And this is pretty much because I don't care what because again, we're not having like the strong indicator of a breakdown, and we don't have the solutions here. But the catalyst for especially for Bitcoin, because Doge did get that correction down to the numbers that we thought, Bitcoin is typically going to react to a lot of the positive catalysts and stuff like that. And you'll say, oh, well, what if, Russia is investing in you in Bitcoin and stuff like that. Bitcoin will always get like those pushes, but I still say Bitcoin is due for a massive sell-off here. I still say Bitcoin is due to break into the 20s here. This is looking like a double top here. I'll take a further look at this tonight, and we'll go over it tomorrow. But this is still looking like we're on track to what we originally charted a few months ago. So even with that, we do have our catalyst coming up for this month, which is AMC utilization, which is, in my opinion, one of the biggest ones that we can count on, because again, that's going to be continuous support that we can look for, pretty much that we can participate in every week. And it's not something stationary like a t-shirt or and all those things are great, but it's something that we can continuously have utility on week over week, month over month, which is extremely useful when it comes down to utility. So I think this is going to be a great catalyst, and we just kind of have to make sure as a community that we show up and we do what we're supposed to support that movement and to get that growth. So with that, I'm going to conclude there. I'll check the numbers and we'll go over the numbers as far as for these Bitcoin. I'm going to take a further look into this tonight, and we'll touch base on that. But as of right now, ultimately what we're going over, what we can, I guess, plan ahead as far as for like the next month or so, we're pretty much going to have to wait and see the effectiveness of these of this 25% rate hike, this 0.25% rate hike, and see how ultimately how that's going to play in the market. Because the biggest thing is, if it has little to no effect, that is going to pretty much resume where we left off. So we have to be careful about that. So with that, I will see you guys tomorrow. And we'll probably do like a QA in addition to the video as well. So that way we can kind of just touch base, and I'll be able to take some questions too. So I appreciate all of you guys, and I'll speak with you later.